Hi, I'm Martin McCarthy, Investment Specialist at Wilson Asset Management, and today I'm joined by WAM Capital, WAM Research, WAM Active and WAM Microcap Lead Portfolio Manager Oscar Oberg and Portfolio Manager Tobias Yao. Gents, thanks for catching up today. Oscar, I just wanted to start by talking about the investment portfolio performance in FY24. Strong performance across all your funds. WAM Capital delivering over 26% and WAM Microcap over 21%, despite continued headwinds with small cap funds. Do you just want to talk to kind of what drove the performance through last financial year?
Yeah, thanks, Marty. Look, we're very happy with our performance over the last financial year. For WAM Capital, we had outperformed by 14% against the All Ordinaries Index, which is, of course, has some of the largest companies in the market, which we don't invest in, meaning the top four banks and BHP and Rio Tinto. But what was even more pleasing to us was actually outperformed the Small Ordinaries Index, which is probably a closer comparison to the companies that we invest in by just over 17%. It was actually our best performance against the Small Ordinaries Index in just over a decade. So very happy with the performance, which was great. In terms of the sectors that drove that performance, there was probably two sectors. The start of the year, we called retail really well. And that was largely due to the previous financial year, retail having a very, very tough year. We did a lot of work across the numbers with a number of companies in terms of the analyst forecasts and projections. And our views at the time was, put simply, they were just too negative. Yep. So there's a number of companies we bought in that period, which was sort of in the back end of the 2023 financial year. That included Premier Investments, Myer, Temple & Webster, Nick Scali. And certainly in the first half of the financial year, that drove our performance. And then the back end of the financial year, I would say the technology sector was probably the highlight there. We had a number of strong performers there. Life360, Pro Medicus, also NextDC, given the phase towards artificial intelligence and the ramp we saw there. But I'd think broadly, when you look back on the year, for Tobias and I, the real story was around our stock picking, which is obviously what Wilson Asset Management generally is renowned for over the last 25 years in managing our investors' money. And there was definitely a few sectors that went well, but there was really stock specific, and there was a number of companies such as Tuas, Regis Healthcare, Sigma Pharmaceutical, and these are stocks that went up over 100% over the course of the year. So look, we were very, very happy with our performance, but July 1 you start again, and into the 2025 financial year we go.
Yep. And you mentioned Tuas there, and Tobias, I know it's a stock that you've long loved. I think we put it in the portfolio back in 2021 at around 65 cents. Obviously, it's been a great ride. Can you just talk us through the thesis there, why we continue to hold it given the strong share price return, and what you see for catalysts for further share price growth going forward?
Yeah, thanks, Marty. Look, I think it's fair to say that the journey with Tuas has exceeded our expectations. Initially, the investment thesis was to back David Teoh, who we think is one of the best telco entrepreneurs in the world, having founded TPG Telecom here in Australia, which ran one market share over many years, and replicating that blueprint in Singapore. And he's done an incredible job over the last 3 years, growing from effectively 0 customers to now over 1 million customers in Singapore, and making a very healthy EBITDA margin. So, they continue to exceed expectations. We think the journey in the story is still relatively underrated. They've just gone into fixed line broadband. We think that's doing really well. And over time, who knows, they could potentially look at other countries in Southeast Asian region if it made sense for the wider group. So that company, to us, one of our best performers and also our largest position in the funds. We're still very positive on the stock.
Thanks, Tobias. And Oscar, maybe just from your perspective, any stocks that you like at the moment, any high conviction positions that you've got in either portfolio?
Yeah, we've got plenty of high conviction stocks across the portfolio, and the way that we're seeing interest rates at the moment. Today the Central Bank of New Zealand cut their interest rates by 50 basis points. So we do think Australia will be probably early in the new year cutting interest rates, and we think ultimately that'll be very positive for small cap companies. So, one stock we think will benefit is a company called ServiceStream, and the ticker there is SSM. We own around 6% of the company and own it across as our top 5 position in WAM Microcap and WAM Capital. ServiceStream is a contracting business, and it's really diversified their revenue streams from being solely exposed really to the telecommunications sector a few years ago to now being across the transport sector and also the utilities sector. Now, the business a couple of years ago had a few problem projects. They've gotten through this, and also with inflation moderating, we actually think that the business will start to see operating leverage come through to the bottom line. The business is in a net cash position, which means that they have more cash than the debt they have on the balance sheet, giving itself opportunities for acquisitions. But most importantly, the stock is cheap. It's trading on a price to earnings multiple valuation of around 13-14 times earnings. Its nearest peer, Ventia, which is a larger services company, is on a valuation 20% higher than that. And as I said, when it was solely exposed to telecommunications, ServiceStream for a period of a year or so used to trade at 20 times earnings. We actually think the business is much better now than what it was a few years ago. So we actually think in time, with another couple of results under its belt, it potentially could re-rate to 20 times earnings. So that would give it quite decent upside when you consider that they could also do an acquisition.
Yep. And Tobias, Oscar mentioned interest rate cuts in the new year being a catalyst for small cap companies. Obviously, it's been a big headwind for small caps versus large caps. Just on the IPO market, it's been quite quiet. Have you seen any nice IPOs more recently, and what's your prospect for the pipeline from here?
Yeah, so when we raised the money earlier this year, we expected a bit more buoyant sort of IPO market for the rest of the calendar year. It hasn't happened. We believe it's been pushed out for about 6 months. Over the last few months, we have had many meetings with pre-IPO companies that's looking to IPO in 2025. And so we're more bullish the IPO pipeline into next year.
Thanks, Tobias and Oscar, for your time today and your insights. We'll be sure to be watching those stocks closely.